There's small green arrows around the world as Japan's Abe takes control of the upper house, China has a hard landing, and Barron's likes Europe. It's a very busy earnings week, and the S&P could reach 1,700 a year and a half early. I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So green arrows around the world this morning as global markets continue to stimulate, perhaps giving some follow-through to gold, which we're seeing up a bit this morning.
Yes, this move off the lows continues in the metals. You know, about 2 weeks ago, you saw blood in the street, everyone saying, you know, now you have to get out of gold. Meanwhile, it's already been crushed. Now silver's going to $10, but meanwhile, it just came down from the 30s. So we were like, you know what, this could be an opportunity. I'd rather see you, maybe cover and look to buy with a right strategy. And then lo and behold, today, if you're in, GLD or you're in silver or gold or silver, you're getting a little bit of follow through. And that's all you could ask for as a market participant is a little follow through. And if you look at the chart of the GLDs, you will see, lots of tradable patterns, right? This was your intermediate little triangle that we broke below 160. That was one exit point. Then on the macro level, remember we talked about the macro level going across around 150. That was a spot to get out. Then you had another continuation to the downside. And then, all of a sudden, when everyone's crying bloody murder or something like that, here was your reversal pattern. Remember, the low was 115.65, made a new low, almost engulfed that entire day. So right there, a bullish signal to either cover, get a little long, then you had a higher low. And here we are going sideways. I think I was long on this day, the only really bad day that screwed up my trading in the metals. But anyway, here we are. Now it's coming into, I think we're at 127. There's a bit more room. But overall, a nice tactical move in gold if you switch some gears and you learn how to, play the opposite side of the herd.
And we're seeing a similar action in silver as well.
Yeah, and silver is the one that I was a little bit more active in, just because you could put your hands around it a little bit more. And silver is not acting as well as gold, but it's very similar. You look here at the chart pattern, and you will see this too gave you an exit around 30 on this symmetrical triangle that broke lower, and continued. Then finally, you had this move. You remember when this actually led gold that day? When it broke above 1830, gave you a nice trade. This was a little bit of a sandbag here. Where I think I was long on that day too, and it hurt. But anyway, never broke that low. And doing some sideways work, and now I would say above 1950, and this could see a move to fill this gap up to 2040. And if you just chased it and shorted it down here, you now have some adjustments to make. And if you were looking for a tactical long, you got a little rewarded. But overall, still, these metals in this group has a lot to prove. You're talking about big time downtrends here, but there is some more room if they want to continue. And if you're tactical and you're trading these things like that, be my guest. That's your time frame.
Well, meanwhile, our futures have a positive tone as it looks like that S&P road to 1,700 that we've talked so much about could actually come a year and a half earlier than you originally anticipated.
Yeah, and you never know when it's going to happen, and I just tried to be realistic then. It was like 2 years ago, I think we were in the 1,200s to 1,300s in the S&P, and everyone was talking about how Europe was going to break up, world was going to come to an end, and people were declaring equities dead. So I was like, you know what, let me just say, I think it's realistic that within 3 years, we could see S&P 1,700. Have a macro plan. Stick with your 401k. Stick with your 529. Look long-term besides doing what we do on an intermediate or active basis. And here we are. And it's almost a year and a half early. You look at the chart, and you will see that we've been riding a lot of these different trends. The last pull-in that happened after this outside day on May 22nd brought us to the 100-day. From there, you had a quick bounce back, digested, showed some commitment to this move down there, and then we closed above the 50-day, and here we are. If you remember when Ben Bernanke spoke on that Wednesday, he kind of reignited a move that people weren't ready for, and we've had a little bit of a pain trade. But ultimately, we closed above 1687 last week. We're on our road to this 1700. The question is, first time do we knock on the door and do they take profits, and how many times will it take until we finally, get into the low 1700s, maybe 1750 at some point, throughout the rest of this year.
Well, the banks have led the market since the beginning of this rally, but they did take a little bit of a break on Friday, closed around the flat line. Do you think this was just a breather?
I do, because earlier in the week they had an impressive move. You saw JP Morgan go to 2013 highs. Bank of America are extending through 14. Wells Fargo hanging in there. Morgan Stanley had a good report. So all in all, last week you had a lot of nice add-on trades in some of the big banks, and that's where we focused. If you look at the XLF, still leading the way, still on its way to highs. This was your last breakout, held in where it had to. It's on its way up. I just mentioned JP Morgan. This broke above, rested. Now it can continue. You look at something like Morgan Stanley at 2013 highs, resting above this gap. And Bank of America, something that we've been saying, keep in the drawer almost since last August, a year ago, and look where that was. This also shows you could hold things and trade around them, and you could make money in the stock market if you learn how to educate yourself and you have the right vehicles, and this one has been one of them, especially Bank of America.
Well, retail also took a break last week as the RTH did hold above its 8-day and saw some tight upper level consolidation. So does that read to you that it's just gearing up for higher prices?
Well, nothing has changed there. I haven't been focusing on retail as much. I've been more in the banks and some tech, but you look at the RTHs, again, a leadership group, a lot to like. Here was your breakout. It's above 2013 highs. It's above the 8-day moving average. Still looks very good.
And the transports had a nice move to highs on Thursday and held most of those gains on Friday, so perhaps some follow through this week.
People want to look at some things for the Dow, and the transports is what they say leads the Dow, and here you are, at highs. So a lot of money came in here when some money came out of tech, and you had your breakout, held halfway, closed near the highs, above all the moving averages. Don't do something different until something different changes, and we haven't seen anything change yet. So why be so bearish?
And the energy sector showed some relative strength on Thursday and Friday. The XLE closed the week on highs. So would you perhaps expect a new high this week?
Well, we are going to have some earnings from this group, which we'll talk about later. But this actually is something a little bit different because the XLE, the OAHs, they were laggard groups in the first 2 quarters. And then, once we had that situation in the Mideast or oil just went back in play, this group, boom, they went right to it. So if you looked at the XLE, you will see, this was as low as a 200-day and then bounced up pretty strong. And from here, you saw digestion as well. And now this one isn't quite at 2013 highs yet, but it played catch up pretty quick. It gave you another nice little 2-day trade while some other groups were lethargic. So it showed you that, money did rotate. Money also came to the OAHs where, look at that. This is at 2013 highs, and earlier in the year, it was a laggard group, and this also hit the 200-day. So it showed you how quickly this thing came back because of oil prices. So sometimes you have to connect the dots, and with oil back in play, this group became a focal point.
Well, the home builders continue to lag the market as the XHB struggles to hold its 50-day. What levels can we watch for clues about which way it may head?
Well, there's some numbers today, and there's also the 50-day, which were above. But this group, which was a stronger group, became out of play. So if you've been banging your head against the wall saying, oh, the market can't go higher because the home builders aren't leading the way, you know what, you probably left some money on the table because they don't have to always lead. That's when the XLE took over. That's when the transports went. So lately, the technology and home builders, which were the stronger point, they just became more of a digestion area, and you have to move on and find the action. If you look here at the home builders, you'll see, maybe there will be another trade here this week because this is not a 2013 highs, and rates did come in a bit. So the reason why I think this came out of play a little is because of the higher rates. They said, oh, it's going to snuff out the housing sector, which I don't think is the case. But anyway, it's trying to hold here. I would say you could trade verse 30, and if it starts getting above 31.38, you could see some momentum come back, and maybe it happens on these housing numbers. So I would say today is a day to watch some of these home builders.
All right, coming up, we're going to go in the trenches with stocks reporting today before the bell and after the close. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with stocks reporting before the bell and after the close today, starting before the open with Bank of Hawaii. This is a regional bank. We know the regional banks have been showing some real relative strength, some names breaking out to new highs last week. Bank of Hawaii reporting before the open with expected EPS of 83 cents. So we'll have to see if there could be some action there afterwards.
Yeah, maybe people are going to Hawaii. I hear it's beautiful there. I'm going to do the Ironman that one day. But this is a nice chart. You know, you look at the regional banks, a lot of them had big moves, this being one of them. So if the numbers come in and they're really strong, I would use 55 as your level there. If you look real quickly at KRE, which is you know, the indice for the regional banks, it's strong, leading the way. So find some strong, you know, names in here, but just know that there's a lot priced in here as this is at high. So if there's any weakness in some of these reports, you know, you better be maybe a little lighter.
And Halliburton put in a new high at $45.99 on Friday. It actually already came out with its results this morning, beat on EPS by a penny, came in at 73 cents and is up a little bit this morning on it.
Yeah, I think a lot of investors were happy in the last month or two because Halliburton, Schlumberger, some of these refiners that were like really well-known names start to come back, and they were just, you know, they were on the side. And you look here, the report was good. But you look where the stock is, I don't know how much opportunity will be there, so I would say it's up a little bit this morning. You know, short term, just make sure it could stay above Friday's high of 46. If it can't hold 46, you know, it might need some time. But overall, you know, this group is back in the game with higher oil prices, and this, you know, this earnings report I think was enough to sustain it. I just don't know how much, you know, more I would say fuel it'll add to here for an active trade if you're not already in there.
We'll also have McDonald's reporting before the bell. The expected EPS here is $1.40. The stock itself has been consolidating. I know a lot of people are probably watching its margins because it's been focusing so much on its value offerings. Everyone's saying that's a big concern there. But what do you think about McDonald's?
I think this one at least is tight. So if it is a good report and it wants to be a gap and go, there's at least some room here. You look at the chart, you'll see it's been consolidating for a while. And for McDonald's, for it to be in a 4-month little, you know, consolidation trend, there's an opportunity there. So if the report is solid and some of those margins aren't, you know, as affected, if it gets above 102 perhaps and stays above it, you can actually get a trade here. If some of those concerns come to fruition and it breaks below 99.47, you know, watch the 200-day, which, you know, I don't remember the last time McDonald's been below it. It's been a long time. So, you know, at the 200-day, sometimes it's a steal for macro investors.
And Netflix will report after the close today. No secret this guy's been a winner. It's still considerably above all key short-term moving averages. It's been hanging on to recent gains pretty well. It's expected to report EPS of 39 cents after the close. What do you think it has to do to impress the street?
It's got to blow it away, you know, and even if they blow it away, they might use it as a signal to sell, at least on the open. So I think if you've been riding this Netflix train with Carl Icahn, congratulations. I know a lot of my guys, you know, have been trading it, and we've been getting these nice 1 to 3 day strategies for 3 to 5%. There's been a lot of them around there. You look at the chart, very strong. This was the last gap up on earnings, which it took a while to consolidate, another gap up on earnings, and then you had some micro trades along the way. This being a nice micro trade to the upside, this being another one right around Sperling's play of the weekend. Here you are at highs. So you've already been giving a lot. You've been given a lot of upside already. So sometimes why even hold through for the earnings? Some people might be shorting it, betting against it. I would say if you're looking to bet for or against Netflix going into earnings, do it with options, not the stock, because it could blow your teeth out if it wants to continue, or if you're holding it, it could, you know, if it misses, it's got a lot priced in. So I'm going to go in flat. I'm going to say this is my level here. If the report is sensational, okay, perhaps it gets above 270 and we get a squeeze after hours. If it's in line and just a little bit better, you know, you better write down all these moving averages and support and see, you know, where it does hold. I'm not making a bet before or after, but what I am saying is, you know, ring the register a little bit if you have big time gains already locked in.
All right, and let's just get in one other regional bank name. We have Zion also reporting after the close today with expected EPS of 41 cents.
You know, like all these banks, you know, a lot of them kind of were solid, and the day, if they didn't go up the day of the report, you know, a few days later they held in and went. So if you look at Zion, I would say as long as this thing holds above, you know, the 21-day moving average and stays above 29, it is in the game to make new highs. Taylor on my desk has been all over this. She started liking it way back here. You know, so you've already seen a nice move. Now the question is, are you a long-term holder and you want to stay through earnings, which as a trader we do not do.
Okay, time for some quick hits here. Let's talk Tesla. After giving us lots of action Monday, Tuesday, Wednesday of last week, took a break Thursday and Friday. Still around the 8-day though. What do you think about Tesla?
You know, it gave us two-way opportunities last week from the short side, the long side, and then the ranges starting to constrict. So for me, I will focus on it. You look at the chart, you know, I love the name long term, but I also like to trade it short term. And right now, you have this inside range where you have 116.51, and then you have a few points of reference, 120.55, 122. You know, it might need another day, it might not. If it starts getting above 123, shorts get squeezed. If it starts breaking below 116.50, perhaps, you know, we explore the lower end. So at this point, I think it needs to wedge. Right now, it's in the upper end. If it stays in the upper end, it could get back on track a lot sooner. If it breaks below, you know, just know that the speed is somewhat changed here a bit.
And CELG gapped down on bad news on Thursday about ending its late-stage trials of its blood cancer drug, but then regained momentum with over 2% of gains on Friday. So signs that it'll just keep shaking that off?
Yeah, and that's the whole thing with being a trader with the BIOS. I know some of my guys had that long because it looked really good, and then you come in, it's down a few percentage points, and it's hard to hold. But you look here, if you were just an investor and said, oh, I don't look at the day-to-day, you know, it's right back above the gap. It came in, closed okay, you know, and then Friday, you know, closed pretty strong. So this is still, you know, in play to make higher highs. The gap is still intact. Unfortunately, when it looked great, you had to go through a little of this, you know, negative price action, but overall it's still in the game, still looks good. A lot of these bios are looking really good still.
Yeah, well, speaking of those bios, how about Biogen? Had a great breakout on Friday. Do you think we'll have continuation?
This, if you get, you know, we talk about day one in a particular area, and this is a good example of a day one with our education. You go to the chart of BIIB, you will see that, you know, it's been in the sideways channel for a while now. So here is your day one engulfing bar breaking above the range. So good book says take that home for some continuation, because typically a day one, like you even saw down here, breaking this downtrend, it led to higher prices. So here's another day one, and we'll see if it can take it back to the highs.
All right, might as well round out the trifecta of biotech names here and talk ACAD, which is above all key moving averages. Yep,
and this one looks like it can continue. It keeps constricting and then expanding, constricting, expanding. For a little guy, you look at ACAD, you know, this last little area is right here. It's got to get above 2070 to continue.
And lastly, let's get out of biotech and check in on 3D Systems, Triple D.
Triple D. This is a fast-growing industry. It's already had some big gains, but it's been consolidating for a while. You know, it is I would say, in play to make a new high on 2013. You look at the chart here; it looks really good. You know, overall, there's been lots of times to buy it, lots of times to be cautious. It did hold in on Friday right here. I am actually long some of this, and I do think it can make, you know, new highs in the year. You know, another name that we've been watching is Sohu. Okay, this stock, not quite as explosive as you would think yet, but it's in the game. You know, it's breaking above, holding above this little area right here. You know, it could see continuation as some of these Chinese names also are having some follow through.
Well, it is the last big week of earnings. Obviously, we have a lot of names to watch today. What will you be focusing on?
I'm going to just see if the money continues to rotate. You know, you would have thought that the market would have been down huge on Friday when you saw Microsoft, its worst day in years. Google was down 30 points. You know, Intel in the penalty box, eBay in the penalty box. But meanwhile, banks hung strong. Money went into some oil names. Some GE was at 2013 high. So I think it's more micro versus macro. You know, look at individual names, and this week we will have a lot reporting. Tomorrow is going to be Apple and Texans, so we'll see what happens there. Tonight's Netflix. And, you know, at this point, there's a lot of different trades to do, and again, people who are being more rewarded are with a glass half full versus half empty, trying to be long versus short, but there is some two-way action for people who are looking to do that. But overall, you know, macro investors who've had a plan, whether it's been 5 years, 10 years, 15 years, 20 years, 25 years, you know, they got to be looking at their statements and pretty happy right now. And I think even if we were to make a new high in the next 3 to 6 months or above 1700 and get a pull in and things start to shake up, still stay the course, because someone like ourselves at our age or whatever age, I think, you know, equities will be the place to be, and you can continue with that longer term plan and also learn how to navigate from the intermediate time frame in order to take cash flow and create alpha.
And with that said, happy trading, everybody. Have a great Monday.